Hello, I'm Jason Ng, and I'm going to talk to you today about foreign investment in RMB funds and the Shanghai and Beijing pilot schemes. China's private equity fund industry has seen exponential growth in recent years. In the last few years, there have been a proliferation of onshore RMB-denominated PE funds formed in China. However, until recently, the opportunity to participate in such RMB fund, whether as a GP or an LP, was really only open to local players. One of the major roadblocks to foreign investors' participation in RMB funds is their inability, under current Chinese foreign exchange regulations, to convert foreign exchange into RMB to fund their capital contribution to RMB funds. This has now changed following the recent introduction of the much anticipated RMB fund pilot schemes, commonly referred to in the market as the QFLP scheme, first in Shanghai and now in Beijing. In the last few years, major Chinese cities such as Beijing, Shanghai and Tianjin have been competing to be China's center for private equity and have been actively working with the central authorities to develop their own RMB fund pilot schemes to facilitate foreign investment in RMB fund. In February 2011, Shanghai became the first city to introduce the RMB fund pilot scheme for Shanghai-based foreign invested GPs and RMB funds. This was quickly followed by Beijing, which rolled out its own pilot scheme for Beijing-based foreign invested GPs and RMB funds in April 2011. The key significance of the RMB fund pilot schemes is that foreign investors' investment in Chinese RMB funds is now finally a reality. Previously, this was generally not possible as China's foreign exchange control regime prohibited the conversion of foreign exchange capital into RMB for private equity investment in China. Under the Shanghai and Beijing schemes, qualified foreign sponsors may set up an entity in the city to act as GP of an RMB fund. Such qualified GPs will be permitted to use their foreign currency to make capital contributions to their RMB funds up to 5% of the fund size. The pilot schemes for both cities also enable qualified foreign investors to invest in RMB funds and allow RMB funds that have obtained pilot status to convert their foreign investors' capital contribution in foreign currency into RMB for private equity investments in China. The foreign LP's investment is capped at 50% of the size of the RMB funds. The features of the Shanghai and Beijing schemes are largely the same. The key difference between the two pilot schemes is that the Beijing scheme requires RMB funds seeking pilot status to have as their principal investment objective investment in 7 pre-identified high-priority sectors. Shanghai does not impose similar sector-focused requirements. The key requirements to set up foreign invested GPs and foreign invested RMB funds under the Shanghai and Beijing pilot schemes are largely the same. A foreign invested GP must be established in the form of either a company or a partnership. It must also have a senior management team with a good track record and sufficient experience, sound internal controls and corporate governance, and a robust financial accounting and audit system. For the foreign invested RMB fund, there are also minimum requirements as to fund size and investment amount per LP. And foreign investors investing in such funds are required to have sound corporate governance and internal control systems, no record of regulatory sanction in the past 2 years, and relevant experience to undertake the investment in RMB fund. An RMB fund participating in Shanghai or Beijing's pilot scheme must also appoint a qualified Chinese bank as its custodians. What may come as a disappointment to some is that foreign invested RMB funds participating in the pilot schemes are still regarded as foreign investors under Chinese laws and are subject to China's foreign investment restrictions. These pilot funds are also specifically prohibited under both Shanghai and Beijing's pilot scheme from undertaking certain investment activities, such as investing in industries where foreign investment is prohibited, trading in securities or bonds on secondary markets, trading in futures or other derivative products, investing in real estate except for self-use, making investment with misappropriated funds, or extending loans or providing guarantees to third parties. The first half of 2011 saw significant progress made on the RMB funds pilot schemes. As of June 2011, Shanghai has already approved its first batch of 5 RMB funds and is now vetting the second batch of applicants. Up north, Beijing has also started accepting applications for its pilot schemes. Similarly, developments are also taking place in Tianjin and Chongqing, and industry players are expecting that these two cities will launch their own RMB funds pilot scheme in the near future. These are exciting times for all of us as we witness the reshaping of China's RMB funds industry. Foreign fund sponsors with ambitions of growing their businesses in China and forming RMB funds should consider expediting their applications. For more information, you can contact me, Jason Ng, at Baker McKenzie.